two operating assets, both in ramp-up phase. I would hope to be in a position to do $20 to $30 million from each asset. The potential to generate our market cap in operating cash flow next year. Many of the experts that I've talked to, both internally and externally, see the potential for this property to host a multi-million ounce gold deposit. That exploration is going to be very aggressive because one of my goals as the new CEO here is to really invest heavily in exploration so that we can actually double that mine life and beyond. But I think that the game changer, the potential game changer will be...
All right, today we are having a discussion with Dan Barnholden, the CEO of Luca Mining, a gold mining company with operations in Mexico, 2 operations to be exact. Dan, it is great to have you on the show. Welcome, and perhaps we can get started with a 30,000 feet short and sweet overview of your corporation.
You bet, and thanks for having me on. I think it's important to actually recognize that we're not just a gold mining operation. We are a gold, zinc is our second most important metal, followed by copper, silver, and a little bit of lead. We've got 2 operating mines, as you mentioned. One is a polymetallic mine. It's a VMS-style deposit in Guerrero called Campo Morado. It is expected to produce around 70,000 ounces of gold equivalent in 2025. We've also got an epithermal gold mine in northwest Durango state. That's called Tahuehueto, and it's expected to produce around 30,000 ounces gold equivalent in 2025. So combined, 2 operating assets, both in ramp-up phase, expected to produce a combined total of 100,000 ounces gold equivalent in 2025 at AISC a little bit north of $1,600 per ounce. And with the gold price where it is, with the zinc price where it is, with the copper price where it is, we're expecting to generate some pretty exciting cash flow in 2025.
Excellent, and we'd love to dive into those financials, into those cash flows in just a bit. But perhaps we can get started with your first property. I believe that's already fully operational, Campo Morado. Yes. What are the specs? What kind of operation is it? How many tons per day, and what kind of ounces can we expect from this project?
Well, so as I mentioned, it is an operating VMS-style deposit. So the largest metal that we actually produce is zinc, followed by gold, and again copper, silver, and a little bit of lead. We are currently in July, we moved from an owner-operator model to a contract mining model, which means that we are ramping up with our mining contractor. We announced that we had hired a group called Cominvi, a very established mining contractor in Mexico, mines for some of the largest of our peers in Mexico, and so we're very excited to be working with them. They are ramping up to a mining rate of about 2,000 tons per day. We have a mill on site that is fully capable of processing 2,000 to 2,400 tons per day. So the bottleneck has been our ability to feed that mill. With the hiring of Cominvi, we expect to be able to consistently fill that mill, and we are ramping up between now and the end of the year so that 2025 is a year of full production.
All right, and I believe you put out guidance for 70,000 ounces equivalent for the full year. Is that actually affected by this switch from operating it yourself with now a contractor?
So the original guidance that we put out several months ago was 60 to 70,000 ounces total. I think we're still happy with that guidance. There's been a little bit of choppiness in the ramp-up phase, but I think that actually, if anything, our mine output at Campo Morado is going to improve in the last couple of months, just because we're going to be able to consistently feed the mill with that 2,000 plus tons per day of mined material.
Makes complete sense, and it will be very exciting for shareholders to see that mill at full operations. Perhaps we can talk about the deposit that you actually have in place here. I believe it's 16 million tons of material, roughly speaking. What kind of life mine is associated with that?
So the most recent mineralized material, 43101 estimate that we have was about that 16,000 tons of VMS material. We have mined a little bit. That resource estimate is 5 or 6 years old, so it's probably a little bit less than that. But we're expecting our mine life to be about 5 to 7 years based on current rates of production. We are in the process. I actually just this morning We had a call regarding our exploration plans for the balance of this year and into 2025. That exploration is going to be very aggressive because one of my goals as the new CEO here is to really invest heavily in exploration so that we can actually double that mine life and beyond. I've set a 3-year goal to double our mine life to kind of 10 to 15 years. The technical people that we're working with think it's just a matter of investment. And so we're going to be investing heavily in finding new resource and then obviously incorporating that into mine plans as we go along.
All right, that is very exciting. Doubling your resource is nothing to sneeze at. What kind of free cash flows should we expect from this mine? You hinted at a 5 to 7 year mine life at the current resource. What kind of free cash flows are associated with that, especially in comparison with your market cap?
Well, look, our market cap is below $100 million Canadian. We're just in the process. Tomorrow, actually, we're closing an $11.3 million financing. So our market cap at 50 cents will move up to about $100 million Canadian. We've got some dilutables and whatnot in there, so on a fully diluted basis, it's a little bit north of 100. But you're absolutely right to ask that question as far as what our cash flows can potentially look like. And if you just do that simple math at 60 to 70,000 ounces of gold equivalent from Campo Morado, there's almost $1,000 margin there at a $1,600 AISC, just given where gold prices moved. So look, it's difficult for me to suggest that we're going to have our full market cap in free cash flow, but that's where the numbers come out. Obviously, we'll need to reinvest in things like exploration, reinvest in things like maintaining our operating capacity through opening new mining phases, etc. But the cash flow will be substantial. The operating cash flow certainly will be substantial. The true free cash flow, I expect to have enough free cash flow to pay down our debt next year, to invest heavily in exploration, and then ideally start to think about either M&A or returning cash to shareholders. I know that a lot of our peers are starting to look at that. Dividends are going up just because the ability of these mining companies in these commodity price environments is really spectacular. Their ability to generate free cash flow, and so that's our goal here with Luca.
Yeah, makes complete sense. Very substantial margins there. Perhaps we can talk about exploration. You're talking about potentially doubling the resource. Do you have some maps maybe you can show us actually where you're going to look for this additional resource?
So those maps are actually a bit of a work in progress. I think it's important to recognize that Campo Morado has not had major drilling actually going on since 2011. The history of the project is quite interesting actually, but also it's certainly had some ups and downs. The project was discovered in the 1997 to 1999 timeframe by the Hunter Dickinson group in a company called Farallon. Farallon was sold in 2011 to a Belgian group called Nearstar. And Nearstar really, through some self-inflicted wounds and also just some general misfortune with the zinc price, they really weren't able to explore very much. So we're going back 13 plus years since any major exploration and drilling has been done. So it's a bit of a work in progress, that mapping effort. What I will say, though, is some of the drilling that was completed by Farallon as they were moving towards a sale in 2009, 2010, it's really quite spectacular. We see lots of potential to replicate some of that drilling, and you're talking about gold intercepts in excess of 20 grams. You're talking about zinc intercepts in excess of 30%. And really, this is if you were around in the business in the late 2000s, you will recall some of the stunning exploration results that Farallon was able to produce. We're hoping and expecting to be able to replicate some of that, both in the known mineralization, but also some step outs to potentially expand that resource base that I mentioned.
Excellent. And then the last question on this specific mine regarding your product mix that you're actually selling. You told us that zinc is the most important component, gold second in that list. How sensitive are you actually to the prices of those commodities? We're talking about 70,000 ounces for the company. I believe it's 50,000 ounces for this project specifically in gold equivalent ounces. Now that the gold price has risen so much, has that number dropped? How does that work?
Well, certainly it's those equivalent numbers were based on, I believe, some work that we did in May, just the equivalence numbers. Obviously, all the commodities have moved quite smartly in our favor, which I'm thrilled about. But you're right, zinc being the most prominent metal hasn't moved quite as much as gold, but we do produce a fair bit of gold. It would be, if I'm being honest, it would be a bit of a guess to try and benchmark where the gold equivalent is today. The only thing that I would say is that for this year we're expecting to be within our guidance. Obviously, the move upwards in all the commodity prices. Zinc has actually been surprisingly strong. Today, it's around $1.35, which is not far off its recent highs. But of course, gold is what everybody wants to talk about right now, with the price being bumping up against $2,700. So we are benefiting. We are benefiting with about 40% of our overall corporate revenue that comes from gold. So as a company, 40% of our revenue comes from gold. So that is moving up in a meaningful way. We are producing cash flow from our two mines at these price levels. I can't really give you that exact sensitivity, other than to say that obviously it's helping us, it's helping our peers, it's helping everyone in the business who had the foresight to buy gold stocks.
Makes complete sense, and I guess the investors at home can calculate the sensitivity for themselves, looking at the revenue mix that is in your presentation and also in your M&A. Perhaps we can now start talking about...
Just to pick up on that, I mean, round numbers, obviously, if we're doing 70,000 ounces of gold equivalent production, that equates to about, call it 15 to 17,000 ounces. If we're able to do that 15 to 17,000 ounces in Q4, which we're hoping and expecting to be able to do, obviously every $100 is another $1.7 million in true operating cash flow. So that's just sort of the basic. I mean, anybody, as you said, any viewer or listener can do that math on their own, but just multiplying that through $100 times 17,000 ounces gets you to that 1.7 million in incremental cash flow.
Yeah, 100% makes complete sense. And also what you started hinting at, most materials that are in your basket are up. Zinc is also up. If you look at it from a 2023, 2020 timeframe, it is up massively. So definitely doing good there. Perhaps we can talk about your second project now. What kind of stats are we talking about? It is currently being commissioned as we speak, if I'm correct.
Yeah, that's right. So in July, we announced the completion of construction. That doesn't mean it was commissioned. Of course, it means just that all of the pieces were now finally in place, and so we've had a bit of a ramp up phase on some days. So the first half of the year, we were kind of 400 to 500 tons per day. The expectation for that mine is to be able to process, and the mill has been built to process at a rate of 1,000 tons per day. I feel that we can even get beyond 1,000 tons per day with some modest capital investment and some tweaks, maybe as high as 1,200 tons per day. At that 1,000 tons per day rate, at the current grade, which is about 4 grams per ton gold equivalent, that gets us to a production profile of about 30,000 ounces. So that's my goal for 2025, is 30,000 ounces gold equivalent production. Again, it's going to be profitable, particularly at these rates, at these gold prices. And really then we start to think about what an exploration plan might look like. Again, we were sitting with our technical committee this morning, planning out, and we are just on the cusp of starting to actually do some drilling. And again, this project has not had any drilling in over a decade. And so we're very, very anxious and very, very excited at the opportunity to be in a position to finally follow up on some of the exciting drill results, some of the things that we've run into while we've been drifting underground. Just a lot of potential here at this project to really, and the home run here is the potential to put some much higher than reserve drill results out that will change the narrative around Tawa Weto.
Okay, and perhaps you can remind us what kind of mine life we are currently talking about.
So it's a brand new mine as you point out, and it's got a mine life of about 10 years at that rate of about 30 to 40,000 ounces. So there's about 400,000 ounces gold equivalent mineable there. So it's a small mine, but really the game plan here for us now is it's a massive property. It hasn't been well explored. Really, about 10 or 15 years ago, the known project was delineated, and then really they've spent the last 10 or 15 years looking to get it into production. It is in production, all the capital has been spent, and so now how I look at this is it's a self-funding exploration project. We're going to, at these rates, we could generate as much as $20 million in operating cash flow just from Tawa Weto. I would expect to invest a material portion of that back into the exploration work that we want to do. And again, we're mobilizing as we speak, and some of the use of proceeds from the financing that we're closing tomorrow will be dedicated to exploring at Tawa Weto.
All right, great. And why do you feel that urge to explore there then? Is that because 10 years mine life sounds quite solid, at least for the next decade? Do you think there's potential to find higher grades, and therefore with the same plant you might actually be able to produce more?
So there's two important things that we're going to be looking to do with an exploration plan here. One, as you correctly point out, if we can find higher grade near mine material, obviously it becomes a more profitable operation. If instead of 4 grams per ton, we can find some material that's 6 grams per ton, obviously the same amount of money spent on moving the rock yields 50% higher cash flows. So it's very sensitive to grade. Obviously, every mining operation is sensitive to grade. So if we can find some immediate opportunities to put higher grade material through the existing infrastructure, we will absolutely do that. So that's goal one of the exploration work that we are undertaking. Goal two, and this is quite interesting, is many of the experts that I've talked to, both internally and externally, see the potential for this property to host a multi-million ounce gold deposit. If you look on the trend and the Sierra Madre trend, and not far down the road, we've got the San Dimas project, which currently sits in First Majestic. That has produced over 10 million ounces over the last number of years. So this is really elephant country. And our project, because of the remote nature of it, hasn't been fully explored. So there's really two pieces that I'm looking to achieve from any exploration work that we're going to do. One, obviously find that near mine material that's going to lead to increased profitability today. And then, swing for the fences in some ways and see if this project or this property has that potential to host that multi-million ounce deposit. And really that question has not been answered sufficiently yet, but we intend to do that work, and partly some of the work is going to be funded by, again, that financing that we just are in the process of closing.
Excellent. And perhaps we can quickly talk about the deposit style that you actually have here. Is it a quartz vein style property where it's quite hard to drill, or is it more homogeneous over the rock? What type of exploration do you need to do?
It's an epithermal style deposit, so it's veining. The vein, you're very aware if you're in the veins, you're not in the veins. And then there's lots of brecciation within the deposit, and so we get blowouts, and we have drifted, and we've announced in the past we've drifted into very, very wide mining widths in excess of 20 grams per ton and 20 meters, and so we're looking to follow up on that and really just find those breccia zones that are going to be higher grade and broader mining widths that will allow us to very profitably bring new material into the mine plan And so, those will be the kinds of things that are game changers for this project. Instead of, narrow vein mining, which is very typical with this style deposit, if we can find some of those brecciated blowouts, then that will be highly lucrative for the company and our shareholders.
Yeah, makes sense. And if you start finding a 20 gram a ton material, that's 5 times more than what's in your current mine plan, so your production is 5 times as high with the same cost profile, that would of course be be a massive boon to shareholders.
Well, I mean, that's you're kind of putting words in my mouth there, but simple math is that if we can find lots of 20 gram material, or we can find lots of mining widths of 20 meters, this has the potential to be a multi-100,000 ounce producer. That's certainly not our expectation. And just to be clear, we're very much at this moment about incremental improvement at both assets. So really, what this story is optimizing what we have. Okay, so making those improvements at the mill at Campo Morado, making the improvements in throughput at Campo Morado, and then the same story again at Tahoe Eto, which is improvements in operations, so making sure that we can consistently process 1,000 to 1,200 tons per day, and then start to go back and look at, okay, can we drive the mill to 1,500 tons per day incrementally? Can we fill that mill at 1,500 tons per day incrementally? And then we start to layer on that exploration potential. So it's really an incremental story. And I believe if we're able to get this right, if we're able to get the incremental improvements right over the course of Q4, if we complete the commissioning at Tahoe Eto, and we're able to consistently fill that mill, then we've got sufficient cash flow to go back and really find those higher grade, higher width opportunities, which will allow us. And look, if we can delineate some really high grade stuff. There's a company called Mithril it's an Australian company just around the corner from us. I think it's actually the closest exploration project to us. They just announced spectacular drill results earlier this week. They're on the Aussie Exchange, and their stock was up 100%. If we can find some stuff like that, it's a game changer.
All right. I think the exploration potential definitely is clear there. Perhaps we can now try to put the projects together, because of course you are one corporation with one balance sheet and one income statement. What kind of operating cash flows should we expect for 2025?
Well, look, I kind of laid out the potential at both assets separately. I would hope to be in a position to do $20 to $30 million from each asset. And again, that's dependent on all kinds of inputs, but really, you think about that, $50 million US, $80 million market cap. That's almost, the potential to generate our market cap in operating cash flow next year. Of course, then we have to invest. We reinvest in the projects. We invest in drilling. The other major piece that we should discuss is really we've got a debt component. Debt repayments are due to start in October of this year. So we're going to start to deleverage the company from operating cash flow. And so as you think about what are we going to be doing, we're going to be generating cash flow from optimized mines. We're going to be using that cash flow to pay down debt. We're going to be using that cash flow to explore. We're going to be using that cash flow to potentially consider opportunities to expand, both organically through optimization and growth at our projects. And then, of course, we think now is an opportunity to be buying low on Mexico generally. There's been a lot of, particularly with the political situation in Mexico, there's been a lot of negative, I would say negative momentum in the Mexican mining scene. And we actually think that now is an opportunity to be buying low on Mexico. We think that our company is uniquely positioned to understand the risks around Mexico, and really to potentially find some diamonds in the rough that need our particular area of expertise to unlock value. So that's kind of that's something that's on our radar screen down the road.
Excellent. Great, and thank you for starting to talk about the balance sheet. I think that was a great segue into what I want to ask you. Perhaps we can outline what kind of debt is actually on your balance sheet. To start hinting at it needs to be paid off by October, but there's also royalty streams, for example, on the liability side. So perhaps you can outline what actually needs to be repaid versus what is just a streaming obligation.
Yeah, just one slight correction there. It doesn't need to be repaid by October. We start repayment in October. So the actual schedule, and I wouldn't want anybody to be panicked to think that we have $18 million. So we do have $18 million in debt. It's due over time, obviously. It's all due to Trafigura. That 18, it can be separated into 12 that is repayable and interest bearing, and 6 that is convertible at 35 cents, and that's also held by Trafigura. It doesn't bear interest. So really what we're focused on is that $12 million of repayable debt. That commences in October. I think that our first repayment is due at the end of the month, so we'll be, of course, making that repayment. And then we've got a repayment schedule that ends in July of 2026. Of course, if we are generating excess cash flow, I will be very actively repaying our debt because I want to be repaid the debt. I want to be in a position to do those other investments that I've discussed, and then potentially consider returning cash to shareholders. So just to recap, 18 in debt, 12 is interest bearing. We commence repayments and we commence a deleveraging effort in October. The other 6 is convertible, doesn't accrue interest in any way. So it's really, I'm happy, and that's due in January of 2026. So I'm happy just to have that sit there. It's all to Trafigura. There's no real requirement to repay that for at least 18 or 16 months. So that shouldn't be something that that we're concerned with. And my expectation is that over the course of the next 16 months, we'll figure out a way to deal with that piece with Trafigura.
Excellent. Then I think the last question I want to ask you, Dan, is what are you the most excited about the next, let's say, 12 to 18 months for Luca Mining?
Oh gosh, there's so much meat on this bone. It's really there are, and so I'm new to the role, and why I took the role is because I saw so many opportunities to really create value, and each one of them is value enhancing. Each one of them, is not a Hail Mary by any stretch. It's very straightforward execution. But I think that the game changer, the potential game changer, will be exploration at Campo Murado. Really to remind people what that exploration looked like in the late 2000s. And I mentioned to you some of the exploration results that Farallon put out in 2009, 2010. It's really quite spectacular. You're literally talking almost 50% zinc equivalent in some of the holes, right? So that's extraordinary NSR. And if we can tag into stuff like that and remind the market what Campo Murado was when it was sold to Nearstar, I think that will be an absolute change in the narrative of what this story is and what we're building here.
All right, excellent. Best of luck with that, Dan. Really appreciate it. So many threads we could continue to pull on, but this was meant as a first overview of Luca Mining.
Wonderful.
Thank you for your time. Really appreciate it.
Appreciate the interest, and anytime you want to follow up, happy to do so.